Hello everyone and a warm welcome to the show. I am Omono Okonko. These are some of the biggest headlines in Africa's energy industry right now. Norwegian independent power producer known as Scatec has started construction on 3 solar PV power plants and battery storage projects in South Africa's Northern Cape province. The projects will cost about $962 million to implement. When completed, the power facilities will have a total solar capacity of 540 megawatts and battery storage capacity of 225 to 1,140 megawatts, and will provide 150 megawatts of dispatchable electricity. Mainstream Renewable Power and Actis have announced the sale of Lekela Power to Egypt-based Infinity and the Africa Finance Corporation. The transaction is valued at $1.5 billion. The Nigerian National Petroleum Corporation has now transitioned into a limited liability company in line with the provisions of the new Petroleum Industry Act of 2021. NNPC Limited says it plans to float an initial public offering by the middle of next year. Impact Oil and Gas has started an exercise to raise $60 million for its appraisal drilling campaign in the Venus oil and gas discovery offshore Namibia. The executive chairman of the African Energy Chamber, NJ Ayuk, has signed a deal for his upcoming book entitled A Just Transition: Making Energy Poverty History with All Natural Resources. The new book will be a follow-up to Ayuk's 2019 book, Billions at Play. The African Development Bank Group, via its African Development Fund and the African Transition Facility, has approved the sum of $66.39 million for electricity access projects in Guinea. The government of the Republic of Benin has inaugurated its first large-scale solar PV power plant with a capacity of 25 megawatts. Afentra Angola Limited has signed a sale and purchase agreement with Croatian oil company INA to acquire stakes in Angola's offshore block 305 for a combined initial consideration of $12 million. In the past several weeks, Africa has experienced a wave of fuel price increases, and these hikes are impacting work and living. The question is, what are the possible solutions to this latest challenge? This is Energy Frontiers. Welcome back to the program. Prices of fuel and its associated products have risen rapidly from Ghana to Nigeria to Uganda, Kenya, and across frontier Africa. Marisa Lourenco is an energy risk analyst at Control Risks, a global consulting firm. She spoke to me about the fuel price hikes across several African cities and the possible way to resolve it. Let's hear more. What are your views on current fuel price hikes across African countries? And what are some of the causes of these hikes in your opinion?
Well, when I look at the fuel price hikes across the region, I find them very concerning because they're coming right after the global pandemic, which, as we know, had a major shock across all economies and has had a very deep impact across almost all economies in sub-Saharan Africa. It's really putting a lot of pressure on the socioeconomic profiles in a lot of nations, and people are really struggling to cope, and governments are not able to absorb these costs. In terms of what's causing them, the main event has been the Russia-Ukraine conflict that has pushed up oil prices, which has driven up the price of fuel. And then, of course, most countries across Africa import fuel, so they don't have oil or they don't have refining capacity, and that obviously raises the cost of things.
So how can these issues be resolved? Do we look to OPEC for solutions?
I think it's going to be tough to solve the issues because, global inflation is very, very high. OPEC has its own kind of objectives and aims. I think that the governments across the region have to do a very tricky balancing act. They have to be able to try to absorb some of the costs or provide some short-term measures to provide some relief. And this, will just to help ease pressure on livelihoods, just also to maintain social stability. But then, that the other side is that a lot of African economies at the moment are turning to the IMF for help. And it's going to be tricky for them to keep up these subsidies because that's not really a preferred approach that lenders like the IMF like. In terms of solving it, I think that eventually the oil price will stabilize if, you're looking at what current oil price forecasters are saying. But I think that we are really in for a difficult rest of the year.
Can increased oil refining capacity in Africa offer viable solutions to this challenge?
That would absolutely help, yes. I think one of African oil producers' major challenge is, they have all this oil, but they export it and then they import back refined petroleum products, which is just absurd. I mean, and obviously the big ones that we're looking at here are Nigeria and Angola. The thing is that to build up that additional refining capacity is very, very difficult. And that's just because you've really got to invest heavily in infrastructure. These things are very costly and they take a lot of time to build. And again, because so many governments are struggling with their, with their economic profiles, they don't really necessarily have enough money to put this forward. Or even if they do, it's going to take a long time to be realized. We saw in Luanda that they just opened a new refinery there, but Angola is still going to remain a net importer of refined petroleum products.
What are the short and long-term impacts of these price hikes?
Well, I think the short-term impact is, really on the ground. People are not able to afford increased transport costs. They're not able to afford increased food costs. I think long-term, there's the positive side, which is that I think people are rethinking dependence on global supply chains. For example, a lot of African countries import most of their food products, which already makes prices quite high. Then, they're dealing with importing fuel. So I think we're starting to look at, okay, how can we reduce this dependency so that even when you do have global inflation, we're a little bit less exposed to these external shocks and can kind of find domestic solutions. But on the negative side is that, again, building up this kind of local or domestic capacity for countries in the region would take a very long time to achieve, and not enough investment has been done to date. And what that really means for the region, at least for some countries, is that there's going to be a lot of social instability in the years ahead. And of course, the risk of social instability in some countries then is that you might have political instability. I think Zambia and Malawi are two good examples here where they've got new administrations. We saw populations very fed up with state corruption, with a lack of investment, a lack of development. But now that these global external shocks, the pandemic and the Russia-Ukraine conflict are really weighing down on these countries, their citizens are turning their anger to these new administrations and saying that they're not delivering. But they haven't had that much time in office, but it just shows the extent to which there's this popular frustration and the impact that it can have on the broader political environment.
Welcome back to Energy Frontiers. Let's track the prices of some energy products. Early on Friday, July the 22nd, the London Brent crude rose 1.73% to trade at 105.66 USD per barrel, while the US WTI climbed 1.55% to trade at 97.84 USD per barrel. Natural gas was trading down 1.06% to trade at 7.85 USD per MMBTU, also in early Friday trade. This week, a gallon of gasoline in Tunis, Tunisia, cost 8.82 dinar. In Yaoundé, Cameroon, A gallon of gasoline costs 2,461 CFA franc. And that is the package for this edition of Your Energy Frontiers. And we thank you for watching. You can follow the show on the Frontier Africa Reports website and across all our social media handles as indicated on the screen. It is goodbye from me, Omono Okonko, and I will see you next time.